So welcome to the Privateers podcast, where we invite business leaders, people making a difference in the Joburg business landscape. And today we have Peter Armitage, CEO and founder of Anchor Capital. So Peter, thanks very much for joining us today. And I wanted to start off with if you could give us a little bit of background about, you had a business, what made you create Anchor Capital? How did you set that up? You took it public and then you took it off the market.
Yeah, Oliver, thanks for having me here. I've always been entrepreneurial. In Standard 4, I was selling the sweets out of my rucksack because we didn't have a school tuck shop. But I've always been in financial markets since doing a CIA qualified with Deloitte. And was in the market for about 5 years and then actually left and started my own business on the internet. A wild pioneer, broadcasting wildlife all over the world on the internet. That didn't work too well. 3 years later, I went back to get a real job and decided that I wanted to be entrepreneurial, but I wanted to do it in a space that I felt I could be the top of it. I could be as good as anybody else. And the wealth management, asset management space, you kind of need to have been through a few bull and bear markets, have some credibility. And
yes.
So I carried on. And about the age of 14, I was running the investment side of Investec Wealth and decided it was time to kind of row my own boat. So I basically left without too much of a plan, just the desire in my belly to be an entrepreneur, a belief in myself. Importantly, in doing this kind of thing, you've got to be going to something that's a good business model. Wealth and asset management is a great business model. You can generate cash quite quickly because that's obviously the anxious thing when you start a business.
Exactly.
Is those early days you can be burning and it can it can be difficult. Yeah, we started the business. I had one small funder, a guy called Ivan Clark. He used to run Grindrod, and we set off. I actually found a little shell which had a guy who had some asset management licenses. Paid him a few R100,000 for that business. It was called Anchor Capital. So we had that kind of big strategy talk, what we're going to call our business, and we thought, well, that's actually pretty cool. So there's no great thinking or mystery behind it, and we set off to provide a superior service, to make people money, keep it simple. And 15 years later, we listed, we've delisted. We've now got about 275 billion rand of assets. I think we're the biggest independent player in the country, and just kept a focus on growth through all the ups and downs. And many of our clients are the ones who joined us in the first year or two. They've got to recommend you to their clients and keep on growing that way.
Pete, you and I have known each other for a long time. We've obviously followed your journey quite closely. There are a lot of similarities, I think, in terms of entrepreneurial culture that we have within our businesses, and that responsiveness to clients. You're now obviously the big shot of your business. You're the CEO. You still see clients?
Absolutely. I think that's at the very core of our business. All of the people at the top of the business have client books. I've got to feel the joy. I've got to feel the pain when markets go well or products or services don't go well. There are some really big clients who, we're very much we're dominated by the high net worth space. But obviously some of those clients are bigger than our institutional clients. There's clients of 1, 2, 4, 5 billion rand. We've got some generational wealth. That's probably the thing I'm proudest of in our business is we've got these generational wealth families to be entrusting us. So it's important that, I much prefer investment markets and clients than running businesses. So we've employed people to run businesses, and we get out there and see clients. And 99% of the time things go well. It's also important for the staff to be there when things don't go well, and for them to observe how you deal with the client, the principles that you put in place, and that sets the tone for the whole organization.
It certainly does. This entrepreneurial journey can be complicated. So age 40, you take this leap, go and create this business. It's an interesting number that you came out there. So there are a lot of studies that go and show that entrepreneurs tend to do their own thing somewhere between the ages of 38 and 42, and you smack bang in the middle of that because you've earned your stripes, you've done some good work, you've created a client base, you've got a bit of cash behind you. Talk us through the early days of Anchor Capital.
So I'd left. We actually found our business plan from 2011 the other day. A guy called Matthew Norwood Young left Investec at the same time as myself. We had no grand plan. And I knew that what my passion and love was equities, and at the core of it all is I can hire and fire any CEO in the world by buying or selling a share. And I love that concept. So if I think somebody's great, I can employ him, buy a share. So that was the basis, was an equity DNA. So I bought a small business. It didn't have any clients. It was basically the licenses. It can take a year to get licenses. And I started a local share portfolio and started a global share portfolio. And I personally populated and chose the shares for those. Those are still our models today, which we go back and give a 15-year track record. Today there's 10 people choosing our global shares. Back then it was myself on a Sunday afternoon. And then we went out and we literally had to hit the phone. I'd always been an analyst. I hadn't been a direct marketer. Matthew sat me down and he said, write down the names of the people you think you would invest with you. I wrote them down and he said, now phone them. And I went, yeah, cool, I will. And he said, no, phone them now.
Yes.
And you get over that. People are not natural cold callers. 1 out of 100 are. In any business, you're selling something to somebody, whether it's yourself, your service, a product, and you've got to believe in that, and you've got to get on the phone and approach clients. So we had an initial product. We then had to go and get customers. And I was actually delighted. I think I had enough credibility then. So I was delighted that the people responded well. People love to see some enthusiasm and energy behind caliber. The caliber has to be a given. And we started populating the client base. The end of year 1, we had R1 billion. End of year 2, 4 billion rand. And so we grew. We very cheekily listed the business when we were 2 years old. We were making a few million rand bottom line. And the market really backed that. So our share went up 10 times from listing. We raised some capital. It enabled us to raise some capital to go and do some acquisitions.
It would have been very good for your profile as well.
Absolutely. So we, suddenly out of nowhere, there was this new, there were headlines going, the next coronation, question mark, kind of absurd things at that point in time. But I think that the markets, and you see the positives and the negatives of it. The market is prepared to value your business on where they think you'll be in the future.
Yes.
If you do a transaction today, it's very much last year's cash flows, or at best this year's cash flows. Every single business that's ever been shown to me for acquisition is always going to do fantastically in years 3, 4, 5.
Yeah.
But realistically, it's about today. The stock market, and the elements of fear and greed in the market will always be there. Whether AI comes and goes, human beings will always operate that way. And when the market got excited by our growth rate, they extrapolated outwards and then actually became quite unrealistic. If we, at a stage we were trading at a 60 PE multiple,
wow,
we would have had to grow at 50% for 10 years to justify where we were at. But it landed up being an incredible exercise from start to finish. Suddenly I think after 3 years, we got Deloitte as a pension fund client. We started dealing with Sasol and some big brand names. And when you list it, it's, you've got that default credibility. And it also forces some disciplines onto you quite early on in your business life.
Yes.
You've got to prepare some pretty solid financial statements and, all the IFRS rules and all those things we love, Oliver.
I think at the core of what you spoke about right in the beginning there with you and Matt creating a list, there's a lesson in there for entrepreneurs. It's that you've got to get things done. You might have a great idea, but sometimes it's just the basics about, I got to pick up the phone. I've got to go and phone this person. I've got to get cash into the till so that I can pay bills at the end of the month, the basics. And I see a lot of entrepreneurs not necessarily following through with that. How did you keep your team following through with the same ethos, that same entrepreneurial spirit as you grew from initially you and Matt to where you might be now?
So there's a strange psychology when you're a bunch of people to a company. Remember, we got up to about 17 people in one room. And it was very easy then because you've got to, first of all, just lead by example. Just do it.
Yep.
And, if we have a big party at work, it's our Christmas party. I'm the one at 7 o'clock at work the next morning. And people know that they're going to walk in after me. My name's always been on the client list. People have got to see what's being achieved.
Yes.
So setting the example is crucially important and having that kind of inherent energy. But so there's 17 people in a room. Then we went into 2 rooms. And then suddenly in the corridor, I hear people talking about the company. And suddenly it's kind of created this brand that it's something other than a group of people.
Yes.
So you've got to break that down pretty quickly. Keep people included in the decision-making process. Make them feel part of it. I think about 2 years after we listed, we went through a bit of a tough time. The markets were down and we weren't doing so well. And I actually stopped sharing too much information with people. I felt I was protecting them from some bad news. And that was a massive learning, because it was a 6-month period. You go through ups and downs. And, one of the guys came to me and said, you must tell us, let us share things aren't always going to be rosy. And I kind of opened up again. And today our business transparency is massive. Anybody's got access to any information. Every week a list goes out of the 120 people in our business who dealing with clients and attracting new clients, how they did last week, next week, their pipeline. So it's and just no politics. Nobody gets rewarded. You don't elevate yourself by pushing somebody else down. We're kind of in battle together.
I love that comment about the no politics. I think that's so important from a business culture perspective. In this business, we speak a lot about the entrepreneurial culture and protecting our culture, protecting our business. But fundamentally at the core of it is that people want to do business with people that they like. And if you don't go out and protect that culture within your organization, when it grows from 17 people to 100 people, clients will ultimately feel that change in culture. You've recently done an acquisition outside of South Africa. You've acquired Credo. That's in the UK. Will you talk to us a little bit about that journey and how have you managed the culture change there?
Yeah, so we've merged with a business in the UK. So we're the SA operation. They've also got some SA operations. That's about 120 people, 120 billion rand business. So kind of similar sizes, our business a little bit bigger. And I think the thing about culture is you can't tell people what culture is. Culture is how people operate when they get to work in the morning. So we get slightly different cultures. I think we're a little bit more, pushy on the sales side. We've got a bit more of a growth agenda. They're a very, very high quality, stable business, 7,500 clients with really, really, really high quality people. But we've been a lot more active, I think, in adding on people who've come with books and, been a little bit more aggressive on that front. So it's neither good nor bad. And, what we've got to do, we also, one of the big reasons we did that transaction is we mustn't pretend to be experts in the UK before we've learned it. We can't arrive with a briefcase and say everything we do in SA is what works there.
Trust me, I've done it here. I'm going to show you how
Absolutely,
to do it here.
Yeah. And it's so you've got to send your A team. Matt, who I talked about earlier, is actually one over there. Yeah. And it's really about working with them and working out what parts of what we do can work over there, and putting our ideas and some, our energy into that part of the business. So it's a fascinating journey, but it's on the stock market, I've observed South African businesses going overseas many, many times, and they fail probably more than 50% of the time. And I think because they're trying to change it, they send their B team. They've bought an asset which others didn't want to buy. That wasn't the case with Credo. There was a lot of guys looking at it. We resonated because they've got a lot of South Africans in the business who started it 25 years ago. So the CEO of our UK business is called Charles van der Merwe.
Okay.
So, we kind of talk the same language. So many aspects of the culture are similar. And, we also don't want to try and change what isn't broken. Their culture is slightly different. You've got to embrace that and just try and add on the things where you think it'll benefit the business.
And where do you see that journey playing out?
So I think we're 13 years old. After 5 or 6 years, I think we had 50 billion rand of assets. I said we're going to have 200 billion rand in 5 years' time. And we've always set big dreams. We've been had quite a bit of fortune on our side, and we've achieved it. So as a group now, we've got 275 billion rand of assets. In 5 or 7 years, I want to be at 1 trillion rand of assets. That's four times the size. that would require some corporate activity as well. And we're not going to do it just for the size of a big headline number. But we're in an industry which grows quite nicely. Our inflation rate is basically the market. So you should double your assets every 7 years or so if we're making our clients' money work. And then, I think we've got a good recipe and a good energy going. We've got some strong shareholders. And if we find things that we can add to our business to increase the scale, we'll do it. But the things that have worked for the business is the personal approach, the bespoke service, the responsiveness we talked about. If you start to lose any of that, you lose your DNA. You lose value. So I don't think in our type of industry, in our business, and it's probably similar to others, you can't decide to just go sideways. You're either growing or you're declining, and you've got to decide which one it is. And I think if you decide that you're not going to put much effort into growth, there's lots of people out there who are. So you'll start declining. So you've got to maintain the energy, the drive, and have a focus on how do we grow our business every year.
And Peter, as an entrepreneur, what are the things that you worry about from a South African business perspective?
So from a South African business point of view, the scale is an issue. It sounds absurd, but you've got to look well into the future. When I think of my life as a stock market analyst, a lot of businesses, they've got to 10 or 20% market share, and it's quite difficult to grow. So the South Africa in a global context is quite a small market, actually. So you've got to make sure that you can create a business the size you want to in that context. I think the lack of economic growth is difficult for lots of businesses because people often will only bring on somebody new or do business with somebody new if they're buying more stuff. If times are tough, it's more difficult to break in. I think otherwise South Africa is a pretty good place to operate. The common answer to that would be BE principles and policies. All I'm actually interested in is certainty. Tell me what the rules are and I'll play by the rules. Yes. You've got to. There's a reality to every country. When I go to the UK, if we go to different countries, there's different pressures, and it's either the cost of people or you've got to look at the landscape and quit moaning and going, believe me, there's opportunity here, and how best you take advantage of that opportunity. So I think the black swan kind of scares in South Africa, where a lot of people immigrate, and they just want some certainty. And does our country get a much more socialist leaning, and policies get more radical? So the politics of the country you obviously have to be aware of. I'm here, so I don't believe that's going to be an all fall down. But there's huge structural issues in terms of unemployment and the like. And that has inevitable consequences for a voter base and how that flows through. So I do worry about policies being sensible longer term. And if we can, we've always been very good at maintaining SARS and the way our finances are run. They've never messed around, except for one weekend. I think Voltaire's van Rooyen. They've never messed around with the right level of people running that. So if the country can maintain that, it'll be fine. But you go over to the UK, the guys are moaning and bitching about the new tax regimes. Yes. They're very much taking from the rich and giving to the poor. Everybody who has a job, you've got to pay another 20% for their health services, NHR, which doesn't function well. And so there's things to be negative and positive about anywhere. A lot of the guys in the UK want to come back to SA now. So it's the sun's shining here. There's lots of space.
Yeah, lots of opportunity.
Lots of opportunity. So it's my kids are here and they're staying here.
Yeah, and that's a great story about where we find ourselves in this country's journey. There are lots of structural issues. I think as business owners, we're all acutely aware of what happens. You spoke about capital being very mobile and looking for certainty, regulatory certainty. And you've seen it in your world. At the drop of the hat, capital can move from this market to that market. It's very, very mobile. Like the weekend special, there's Van Rooyen, finance minister, perfect example. And what are they, off the back of that, I guess what you would have seen out of Credo is an opportunity to operate in a different market, maybe diversify some of your risk so that it's not exclusively from a South African risk perspective, maybe a bit of UK risk. What can you tell us a little bit about that journey?
Yeah, so I think we went to the UK and we did the Credo merger transaction because that market is 30 times the size of our market.
Wow.
A lot of the skills and everything that we do is the same as what they need there. So our research team, our admin, all of our processes, it's a very similar business. So we wanted to diversify into a different marketplace, a different opportunity set. They've also got a slightly different business in an investment platform, which we can use for our clients. So lots of synergies. But I think that the average client there is probably 4 or 5 times the size. So for the same amount of, just in terms of growing and diversifying a business, the same amount of effort and often with not too much more cost, if you resourcing from South Africa, has a client that's 3 to 5 times the size. So I guess we also, entrepreneurs are explorers. And you go like, we've kind of feel that we've cracked the recipe here. So we want to try it in another country and see if we can make it work there. With full understanding, and we're very cautious about, we don't know what we don't know. But we're excited to see what we can do in another territory, in a territory where there's a huge amount of wealth. The average GDP per capita there is significantly higher than South Africa. And, we talked at the beginning, the South African market is ultimately quite small. There's numbers of between 20 and 100,000 potential high net worth clients, depending on how you define that.
Yeah, and potentially a shrinking pool, although some might say that even in the UK, there's been a bit of a migration of high net worth families out of the UK. Are you seeing any of that?
Yeah, look, we're not big enough there for that. If the market share is 50,000 and there it's 500,000, we've got many years until we've got meaningful market share in the UK. So even if 10% of them leave, it's still 450,000 people. So that, the market's shrinking a little bit at the top end, and it's because of the tax rules they're putting in for non-DOMs. I won't get into the technical detail. Even if that was to shrink by 10%, it's still a market that's 20 times the size of South Africa. So that's a problem for the really big guys, which will be one day, but not today.
Excellent. And Peter, if we had to have a look at world markets, obviously something that you live and breathe on a day-to-day basis, what are the macro trends that you're seeing within your business that potentially clients should be aware of?
So AI is everything. I think I was just doing some maths yesterday because in our business, a word that I use a lot is context and materiality. And we get a lot of phone call from clients who watched a Bloomberg headline last night and they're in a panic. And you explain to them that has no impact. This year particularly, our equity portfolio is up 15%. And think of what's happened. Wow. Tariffs, bombs flying all over Iran, Israel. It's what does actually impact the market. So a number that's quite interesting is the capex spend of the Mag 7, the big 7 tech companies this year, is going to be about $500 billion. That, quite coincidentally, and this is what I was playing with last week, is the GDP of South Africa. So those 7, that just puts it in context. And that 500 is about 150 4 years ago. So we're going through the biggest investment in technology in our lives ever in an accelerated time period. NVIDIA is the poster child. It was the number 60 company in the world. If you look back 3-4 years ago, it's now the number 1. It's a $4 trillion company. Wow. It's got 95% market share in what it does. It just was there at the right time. It was producing the high fast processors for computer games when Intel was focusing on the slower stuff, CPUs and GPUs for the laptop. And then this became in demand and it just went through the roof. So that they also, for financial people, they operate at a 75% gross profit margin and making a 65% operating margin for the biggest business in the world. It's just insane. So that spend is being invested in absolutely changing the world. And I think people have got absolutely no comprehension of what will change and how it will change over the next 5 years. And any business that you do or anything you get involved in. So we, for our clients' money, for investment money, we've got to make sure that probably one is a defensive position, that we're not invested in businesses whose businesses are going to disappear and because of AI. So like the one that springs to mind is Adobe, which has been a bellwether stock. But now if you think of it's a lot of graphic designers using their products and services to create stuff like that might all become completely irrelevant. I might be able to create a video of any kind in 2 minutes on AI, competing with a guy who'd spent his life becoming a graphic designer. So I've got to make sure that I don't lose from it. But then I've also got to make sure that I'm invested in what that brings. If I think back to, when I left the industry in 2000 and started an internet business, it was very similar. So huge amount of hype. And after 9/11, nobody invested any more money in the NASDAQ and the companies weren't making profits. So 95% of the companies listed on the NASDAQ by number in 2000 were bankrupt a year later.
Wow.
I mean, it's an absolutely astounding number. There were, by number, it was hundreds of small little businesses. Yeah. What's different this time, there's real money being made and real money being invested. And it is kind of favoring the big guy, because at the moment, AI is all about having, in order to do something from an AI perspective, you need capital and you need processing power is the magic. So that's the key trend. That's far more important than any kind of politics and the like. And then the ultimate fundamentals I don't think change. Greed and fear. We believe strongly in compounding good quality businesses, compounding earnings growth. Within the context of what's happening in the AI, you kind of feel quite comforted to own a food company that food isn't getting changed by AI.
Yes.
So it's and then I think we also, in the first 10 years of our business, we went through a no interest world. Bobbed up and down, but most of that time period, you had to be invested in equities to make money. I think we're in a higher inflation, higher interest rate type environment. So, you can, today you can earn 8.5% in South Africa risk-free in our core income fund. You can earn 4.2% offshore in dollars. So without taking risk, you can beat inflation.
Yeah.
But these things change over time and you've got to shift and manage money as you move along. Geopolitics is, the currency is becoming quite critical. Dollars weakened 13% against the euro this year, which is dramatic. So after all is said and done and markets have absorbed Trump and moved on, what's left is a higher gold price and a lower dollar, which is an indication of... So that's, I think, something you got to watch over the next 10 years. America is still the place to be. All that money that I'm talking about is all being invested in America. All venture capital happens in America. The new ideas are getting invented. There's people prepared to risk their money. It's the frontier invention. It's still going to grow GDP at 2%. It's still the world power.
Still the engine room of the world's economy.
Yeah. From an investment point of view, emerging markets are only 13% of global stock markets. South Africa is 3% of the 13%. So we literally are... kind of a speck on the surface. So, what we call the foreign fund managers, we call them growth tourists. If they see some growth happening in South Africa, they'll pop in and have a bit of a visit and then, move along to Turkey or Brazil or Argentina, wherever the next opportunity sits.
So, Peter, in a world where things seem to be changing so rapidly, technology, geopolitics, what advice do you give your clients about holding the course?
So I think the key thing is that there's some great businesses around the world that if you invest in and just stay invested over a time period, that's actually always the best advice, is to keep it as simple as possible. Our richest clients are the ones who've had equities. A lot of them had rich parents they were lucky to have, but the rich parents put money in shares. And, that old principle of 15% a year, you double your money after 5 years. 10% a year, you double your money after 7 years. So the family whose dad put the money away 40 years versus 45 years ago, the one's got double the money of the other one. So it's and get some good investment professionals to hold your hand along the way. You can only, if you spend 24 hours of your day consuming all the financial information that comes out, you can consume 1% of it. So we've got a team of 25 guys doing that. We can still only consume a few percentage points of it, but don't have knee-jerk reactions. There were 5 or 6 times this year when we had a lot of clients who wanted to react in a knee-jerk fashion to what was happening, and it was the wrong, 90% of the time, it's the wrong call all the way along the way. So to start investing early, to compound the growth, these things are not rocket science, and I guess that's no surprise, because the old principles of investing will still continue, but you've got to be pretty. Also it's in our market, passive's becoming more interesting, and it's been the time to be invested in for the last 5 years. You've probably done better than most asset managers being in an index, but our game isn't just about index or shares. It's about asset allocation. Should you be in interest? At the moment, we've got alternative and income funds that are earning more than equities without the risk. The equity market comes off 10, 20, 30%, which it does every few years. The guys are fine. So we're finding it's quite easy to make good money now without taking too much risk. So we've probably got less equities than normal, but and equities are very expensive. So not to get too excited about it, to invest in good quality stuff. But it's, then to understand when something structurally changes, because it's that AR mix is changing a lot. Amazon doesn't just sell online books anymore. Most of its business, or the biggest part of its business, is providing cloud infrastructure to people, if you'd said that many years ago. So businesses change, and good quality compounding businesses. In the start of my career, I always wanted to invest in the small cap, because I went, surely if it's 1% of the size of the big one, it can triple in size. But that doesn't, the good company that's got to a certain size, it has now become my first prize. I always want to add some small caps to it, because there's no greater joy than putting some client money in something that goes up 100 or 200%. But the good quality, they're largely American businesses, a good portfolio of those. We've also, in the investment world, giving people access to private assets that aren't listed, has become more of a trend. We've driven that in South Africa. We've got some nice alternatives funds. So normally the buying into a private equity opportunity and unlisted businesses like data centers in Europe, and some logistics property in the UK, and we've just given clients the ability to invest in Epic Games, which isn't listed in America. So some things which aren't sensitive to all these big market moves.
Yes.
Previously, you had to have a huge amount of money and lock it up for many, many years in order to invest in those things. So we've tried to make that a bit easier for people, and we've created some funds that do that. That's a kind of trend that's coming through in this space. If you can use gearing well, it's listed businesses must be very sensitive to gearing, because prices go down, and then there's all sorts of covenants that can be breached, and the market's analyzing them every day. A good quality cash flow business with some gearing behind it. That's the typical private equity formula. Their guys are getting 15, 20, 25% returns on good businesses. So that's a segment of the market that we're giving people exposure to as well.
Your enthusiasm for your business is obvious for everyone to see. What motivates you?
I think you've either got fire in your belly or you haven't. I always say to people who want to be an entrepreneur, and in fact, there's a guy who's got a job offer on his desk in another territory to start something for us. And I had a frank conversation with him, and I said, that either terrifies you or excites you, and it's one or the other. So I'd like to be entrepreneurial and to take the risk. And I think that the point at which I left Investec was when my 15-year plan was laid out for me, to go this is what the future holds for you. And that terrified me, because I don't want to be limited by that. I want to have some optionality. I want to create something. So I think that's in your belly or not. And I think you need to be honest with yourself if you lose that kind of appetite and energy. And then it's all about people. If you've got good people around you, we all go through ups and downs. There are periods where I'm not feeling particularly enthused, and the guys around you pick you up, because it isn't a CEO running a business; it's a team of people running a business, and we've got to keep peer pressure on ourselves.
And did you always want to be an entrepreneur? Did you have it in your makeup from early days?
Yeah, absolutely. Yeah. No, I was selling sweets in the tuck shop when I did my articles. I was auditing a postcard company.
But didn't you go to a fancy school? You're still able to sell the sweets?
No, that was at primary school.
Okay.
I got a bursary to my fancy school, so it was My dad was the one, he was the spud guy who used to drive in the old Granada and park it behind the tree. But it's, I've always had the entrepreneurial bent and just love the principle of, if you think about it, you can hire some space, have a desk, create a brand, put some people in, and suddenly you have a company.
Yes.
And that, if you can make that work and you can have people leveraging off great people to collectively create wealth, the concept of wealth creation by doing that is I can't believe that wouldn't be exciting to anybody.
Yes.
But it's not for some people. And you can have great careers and create a lot of wealth by doing well in a big corporation as well. I used to kind of write that off. And there's times, it's not always easy. There's times when you go, maybe I should have just stayed and, kind of gone along the path. But it's, I think it's just something that's in your belly.
Yeah. Peter, it's been fascinating having you here to talk about your own entrepreneurial journey. What words of advice would you give anyone out there looking to start their own business? Would you encourage them to do what you did, or would you tell them, don't do that?
Yeah, so I think the right combination of energy and caliber and business model, and you need kind of all three of them to make sense to do it.
Mm-hmm.
So don't do it if it scares the hell out of you. There's nobody's telling you have to be an entrepreneur. It can be damn difficult. Yeah. So at the early stages, the first few years, you've got to make sure that you've got cash to see your way through, because your life can be complete hell and you can lose everything. So first of all, the business model has got to make sense. Is it something that generates cash? I've seen some guys create some great businesses, but long working capital cycles, and after 3 or 4 years, they haven't made any money and their life's miserable. Then you've got to have the caliber. So yourself, understand. The one thing I've learned in the business before I started my own business is complementary people.
Yes.
You've got to have all the different skills that make up. And I don't have to be a good HR person. I don't have to be a good accountant, or I need to understand what I am good at and fill in the spots that I'm not. So caliber, business model, and then energy and desire to do it. So on that day, and a lot of people love doing the preparation is very sexy. And I'm going to have this great website. And then the day comes, you were referring to it, where you've got to pick up the phone and say, I would like you to buy my product or be my customer.
Yes.
And that time period can be so when the rubber hits the road. So that's got to excite you as well to do it. To make sure that you've got the financial backing is key. And that's the difficult part. There's very little venture capital in South Africa. That's what makes America great. There's heaps of venture capital. A good idea and a good pitch deck will raise some money. Doesn't work, somebody will finance the next guy. In South Africa, it's difficult. You've got to have somebody to back you, or find a way of doing it. And then I did try and find something. The world's become a small place. Those top 7 companies I talked about are 35% of the US market, 7 companies. So technology means that if you've got a good idea, you can sell it all around the world. So, in this new world, if you can find it's easier said than done.
Sure.
If you can find something that has some global appeal, that's where, the South African business becomes the billion-dollar unicorn, that all entrepreneurs are ultimately dreaming of.
Something that you've spoken about quite a lot, Peter, is your team, how they're all complementary to what it is that you're busy doing. Many of them I know have been with you since right from the beginning. How active a role did you play in picking that team?
So we're heading towards 600 people now in the broader group. So it's you become less and less active, but very active in all of the kind of key people, because that's the culture of your business. Becomes the culture, behavior, ethics, and principles of those first 5 or 6 people, because they in turn will hire people and that will spread. Even in our business, our branches have got slightly different cultures, and that's because the person running the branch wants to operate in a certain way, and you've got to give people that freedom to do so.
Yeah.
But the most important thing, all I actually had to do really was have some energy and put it together, and then hire 10 great people. If I'd hired those 10 great people and stepped away and said, go for it, I think the job would have been done.
Yeah.
The fact is, I wanted to get involved and wanted to make it, wanted to drive it. But your one person's ability to influence you've got to try and manage it so it becomes less and less.
Yeah. Peter, the conversation's been fascinating as always. I've learned a lot from the journey that you've been on and that whole entrepreneurial spirit that sits within Anchor. To be fair, some of the aspects that are in there, we try and replicate within our own business. And thank you very much for the time today and for sharing your story with us.
Oh, thanks. And we've loved the business journey with you. So thanks, and look forward to many more years.